Hello everyone, and welcome to TBR's webinar, Back on Top, Public Cloud Vendors Continue Expanding in All Areas. I'm Justin Surgent. I'm hosting today's session. TBR's public cloud research highlights trends driving 2015 revenue and evolving trends that will drive success across SaaS, PaaS, and IaaS markets. Amazon Web Services, Google, Microsoft, and Salesforce are leading the market, but vendors such as Workday, ServiceNow, IBM, and SAP are quickly catching up. During the webinar, we will focus on topics relevant to recent events, including vendors' portfolio evolution to address varying global needs, the importance and highlights of the ecosystem, and the developer landscape. Insights from today's presentation are from our public cloud benchmark. If you'd like to learn more about this report, please reach out to myself or one of the analysts after the presentation. Before we begin, there are a few housekeeping items I'd like to cover. First, we'll be recording today's presentation and posting it on our YouTube site, TBR channel. We encourage you to visit this channel to view this presentation or any of the previous presentations we've posted. Second, we'd like to hear your thoughts and opinions on what we're presenting today. Please send any questions you have to the Q&A function, and we will address as many as we can at the end of the webinar. And finally, I will be following up with all of you via email tomorrow afternoon with the recording link from today's webinar as well as the slides. You can also find our slides for this webinar as well as our previous webinar on SlideShare at slideshare.net/TBR_market_insight. Now let me introduce the panelists presenting today. Principal Analyst Allan Krans leads TBR's coverage of the technologies and business models at play across the cloud computing landscape. Allan is the content editor of TBR's public cloud benchmark. Jillian Mirandi is a senior analyst in TBR's cloud practice, responsible for analyzing key vendors in the market. Jillian is lead author on several TBR syndicated reports and benchmarks, including the public cloud report. With that, let me hand this off to them.
Great. Thanks, Justin. So this is Allan. I'll kick off, and then Jill will take us through into the body of the presentation. But I wanted to pause and take a moment to highlight kind of overall what we're seeing in the public cloud market, because as the title of today's session states, we are seeing a resurgence in interest among customers as well as investment on behalf of vendors in the public cloud space. And I think we've reached a point where through both customer usage of these technologies, the scrutiny and evaluation that's gone on over the past couple of years, we're seeing an increased comfort in terms of the security and the delivery aspects, which historically there was a lot of focus around public cloud in a negative way. We've seen a lot of that be alleviated to a large degree, both from customers gaining increased comfort as well as vendors coming a long way in terms of adding to the management security and capabilities of the public cloud platform. So it really is, now more than ever, an important part of how customers are looking at and engaging in cloud services, and we expect that to continue growing going forward. So with that kind of change in the market and evolution, if you will, there's both from the pure play vendors an effort to scale out into new areas of the organization to leverage their footprint that's been established in specific areas and try to scale out as quickly as they can, because on the other side of the spectrum, the larger vendors have come a tremendous way in terms of catching up, transitioning a lot of their existing offerings over to cloud delivery, acquiring leading properties and vendors in specific spaces, and also integrating the migration from their traditional technologies, the traditional management platforms, and incorporating public cloud as part of that more holistic solution that they're going to market with. And so in that context, I think now more than ever, the public cloud, its role in terms of the spectrum of the cloud adoption and cloud migration is being solidified, and that we're seeing a lot of focus shift to not just the technology, because that's come a long way. Now there's more difficult changes to occur, particularly for the legacy vendors in terms of how to effectively sell and compete with different buyers as well as different providers in terms of the pure plays so that they can, in the end, be effective with pushing that vision of a hybrid environment that pulls in public as one piece, but also leverages a lot of the legacy technologies and assets that they can bring to bear. So with that, I'll hand it over to Jill to head into the presentation.
Great, thanks, Allan. Thanks all of you for attending today. We have quite a broad audience, which is quite reflective of the public cloud market in general. This slide will kick off the presentation with, and this is a deeper depiction of what's happening in the public cloud market, or what happened in the public cloud market in 1Q15. The x-axis is year-to-year corporate growth. The y is year-to-year public cloud growth. The size of the bubble is public cloud revenue in the quarter, and the color of the bubble is the company's history, so whether it be a multi-line like IBM or a pure play like Salesforce. Now, we have a couple of different groups of companies here, and they're all acting, as you would expect, a bit differently. So the pure plays, they're maintaining average public cloud growth, which is good in comparison with some of the vendors that have high triple-digit growth and are investing billions. They also have well above average corporate growth, albeit from a smaller base at this point, but with public cloud and corporate growth almost matching when you take out professional services, having growth between 20 and 80% or 20 and 60% is very impressive. Now, what these vendors have in common is that they're all horizontal breakout vendors in specific areas. So Salesforce was the first cloud CRM vendor, doing extremely well there. NetSuite and ERP, doing well there, moving more into the enterprise space. Then Workday in HR, ServiceNow in IT service management. But what they're doing now that the traditional vendors in these areas are also getting into cloud and have competitive offerings, is they're beginning to expand not only more horizontally, but also vertically. You have Workday launching a PSA service in April, so a HR solution for professional services firms. Salesforce, they launched an industry unit about 2 years ago, and they have customized quite a few applications at this point. And Box, who is partnering with Accenture to go into healthcare. So these vendors have to expand very quickly to maintain that growth, as well as to maintain a competitive advantage now that the traditional vendors are in the space as well. Next, you have the internet vendors. So Google and Amazon, these are extremely innovative vendors for what they are, search and advertising and e-commerce. They have an abundance of resources. They have a history of cloud development, and they have a lot of global data centers that they can offer cloud through. Now, their history in cloud development is so important because they've had large development teams for years. They've had the technology, they've been able to run extremely quickly, and now to attract even more developers, they're starting to leverage what they already know from developing their own cloud services and expose those to the public. This is where things like containers come in, API management, a lot of things that they've learned internally, they're now offering to their developer bases. I think it's also interesting that they are coming at cloud from 2 different areas. So AWS comes at it from much more of an infrastructure point of view, and Google from a SaaS point of view. Now, at this point, they've both merged. AWS has services like email that falls into SaaS, and Google has a pretty broad SaaS, PaaS, and infrastructure portfolio. But we're seeing that development space I was talking about before, that's their most recent area of investment. There's a lot of developer wars going on, and what I think is most interesting that we'll talk about later in this webinar is Google's recent announcement that they'll support OpenStack. Lastly, we have the more traditional vendors. So these are multi-line, software-centric vendors or telco and hosting vendors. So all of these vendors have invested billions of dollars to grow their cloud business. And it is working. You see IBM, SAP, Microsoft, they have extremely high public cloud growth. However, all companies in this bucket, they're having difficulties shifting from the traditional to the cloud model. Some of them because it's just a hard transition and cloud remains a small part of their business, and others because they were later to the game and are just still catching up. Now the software vendors are doing pretty well here, but the others are continuing to struggle in their overall corporate shifts.
Yep. And I think another thing to consider for these vendors is, here we're obviously focusing on the public cloud space, but their broader business, their investments in services and private cloud and traditional IT all remain and still are the main source of revenue for them. And so in that context, you know, it's not surprising that in terms of the corporate growth, so from left to right, they're all clustered in that near the 0%, if not negative, territory for the overall business. So they are struggling with how to maintain as much as possible that larger book of business that is not in the cloud, and to a lot of degrees that is limiting in some way their full-fledged investment in terms of cloud growth, when they obviously have to deal with much tougher decisions in terms of the traditional business as well.
We'll now dive a little bit deeper into the applications vendors and how they're expanding horizontally to add new revenue streams that way, as well as catering to different industries. So this is a bit more of a granular view than the last slide. Here we're looking just at the 1Q15 public cloud SaaS market as opposed to the whole market. The y-axis remains the same, year-to-year percentage growth, and the x-axis is now year-to-year absolute dollar growth. So the leaders here, SAP, Microsoft, MuleSoft, and Salesforce, the leaders both in terms of revenue and growth. You have SAP and Microsoft who began their cloud migrations relatively early by moving some of their core apps to cloud, and then by acquiring. Most recently, Microsoft acquired Acompli, which is improving their Outlook for iOS, and Sunrise, which is a mobile calendar app in February. Now, the point of these, now that Microsoft has been successful with O365, it's expanding its mobile capabilities, and it really wants to integrate all the productivity suites, the collaboration with their mobile platform. We think we'll continue to see smaller investments there to really improve the user experience. SAP, it's still integrating Concur, Ariba, and Fieldglass to support online commerce and transactions. So again, these vendors they've moved their own portfolios to the cloud, and now they're really filling gaps with large and small acquisitions. MuleSoft continues to expand integration capabilities. So MuleSoft saw an opportunity with hybrid and how to integrate different cloud-to-cloud applications as well as cloud-to-on-premise applications. And we expect to see more of those cloud-to-on-premise integration tools. MuleSoft will expand those in the future. And then there's Salesforce. Salesforce has been constantly expanding over the last 4 or 5 years. Most recently, we've seen them beginning to tiptoe once again into the back office. They've made a couple acquisitions, a couple announcements that they're moving into HR. Nothing has been too substantial yet, but currently they have launched they're calling it an HR solution. It really is layering social capabilities onto other vendors' HR suites. But again, it is Microsoft getting its foot in the door there, and we think that it'll continue moving in that direction. Now, it's also important to note the color of these bubbles here. So I'm really talking about SAP and Microsoft. After looking at their business models for the last couple years with the transition to cloud, and as Allan mentioned, for a while their cloud was a nice to have. They were investing. It wasn't doing too much from a corporate point of view, but now the businesses are really driving those corporate turnarounds, and in their own currencies, both companies, they released this week and did well, both driven by cloud. So this shows a little bit of where the bigger cloud companies, how they're expanding. As you know, Salesforce started out as CRM. It's expanded into services, platform, collaboration, marketing, and most recently analytics and HCM. SAP went from ERP to HR, analytics, platform, and e-commerce. And Salesforce and SAP, both of these vendors are looking to be that cloud business platform. They're both coming at it from slightly different points of view. SAP will talk about hybrid strategy and the HANA cloud platform that bakes in analytics and real-time analytics. And Salesforce is coming at it more from a customer experience point of view. They want their customers to quickly and easily be able to gather information and understand what's really going on in the business from one console. So both of these companies are going that way. Salesforce has a little bit of a broader portfolio in terms of horizontal cloud apps, but SAP has a broader portfolio in terms of both on-premise, private cloud, and public cloud applications. So it'll depend on what the customers want to move where. And lastly, Workday. Workday is a little bit different. They want to stay more on the pure application side. They started with HR, moved into financial management, similar to the others, added analytics, and are now customizing vertically. Now, there are issues associated with moving so quickly, and we've seen a lot of these come out in our customer interviews and partner interviews. There is a time to roll out. So Workday announced quite a few applications a year and a half ago, and is still in the process of rolling out those applications. So this is good in terms of customers knowing where they're going, know what to expect from them, but it's also difficult if they announce something and it takes a year and a half to fully roll out. Customers may be wanting to move a little bit quicker. Also, product integration. So we see this with Salesforce quite a bit. They've acquired a lot of their cloud applications, and now they're still working on integrating the different platforms. So they have 3 different platforms, the different applications, especially right now with their marketing cloud integrating with everything. So it does take quite a bit of time to integrate those horizontal apps. It's extremely expensive. So this causes operating margins to go down. It also, both by acquisitions as well as R&D investments. They have to retrain the sales team, so the sales costs go up. And related to that, their implementation and sales problems if people aren't fully up to speed. So growing quickly in all these areas, definitely a plus. It's needed for these vendors to continue being on top, but it is a slippery slope when you start to go a little bit too quickly.
You know, I think one of the other things we've seen, particularly for the pure play vendors, is from a go-to-market standpoint, they are, whereas the broader vendors can leverage existing relationships, use the sales teams to evangelize some of their transition to cloud. For the pure plays, they're really forced to go out and sell customers not only on their solutions, but on a lot of times cloud in general as well. So they're holding the bag for making customers comfortable with cloud in general, the benefits, why they would consider that versus what they've been doing today, and then also need to hold that conversation so that they can differentiate their own offerings in that growing field and context of both other small companies as well as some of the established relationships. And so when you're moving from one offering category to a next and expanding very quickly, it adds more complexity and burden onto those already kind of Spartan go-to-market organizations to, you know, double their effort or increase by some significant amount the amount of awareness that they need to generate to support that type of migration. And so we've seen kind of slow progress. We know that, for instance, NetSuite is more channel focused than you would think, that there's actually significant portions of the business being driven through channel partners. And so for some of the smaller organizations, you know, that is one of the ways to offset that go-to-market burden of entering new areas, expanding the portfolio, and that there has been, I think it's been a long time coming. It's been something where the value prop for partners has been unclear for some time, but I think it is the way that these companies can continue to innovate and grow while, not taking something that's already very low margin and adding additional investment that's required to continue to expand either horizontally, geographically, or into new verticals.
And for a lot of these app companies or SaaS companies, customer satisfaction is key. So all of these things we've talked about, the expansion, the working with partners, working with SIs, if the customer isn't satisfied or the product doesn't meet their expectations, it's hard to use even, they can't get it on their mobile, all of these will lead to them looking to other applications. And the key to the cloud business model, in general, we believe, is very easy and low-cost renewals. So these cloud vendors, they're happy to spend a lot of upfront time with you to make sure everything is working out, especially with the cross-selling and the upselling of these new portfolios. But as soon as customers aren't satisfied and they start to look elsewhere, that's where you'll see some of these companies begin to fail, quite frankly, because they spend a lot up front. It'll take quite a while for the customers to become profitable for them. So again, expansion is key, but what's almost more critical in my mind is keeping those customers happy. So it's really that takes quite a lot of upfront time to do this. Now here's another view of, this is of the HR market. The graph on the left is adoption or enterprise adoption of Workday, Oracle, SAP, IBM, and then other vendors' HR suites. And the graph on the right is the annual revenues from these same vendors for public cloud HCM or HR. So in 2011 is where the graph starts looking at Workday. You can see Workday is really the only vendor here. They're doing extremely well. 2010, 2011, that's where people started to take notice of cloud, both in terms of the customers as well as vendors. So Salesforce started making huge investments in this in 2010 as well. So then you see 2012, SAP acquired SuccessFactors to get in here, Oracle acquired Taleo, and IBM acquired Connexa. So very quickly, these traditional vendors got into the public cloud HR market. In 2012 and 13, and even now, they continue to grow pretty quickly. But what is interesting is that you see Workday has once again taken over in terms of revenue as well as adoption. So it is possible to remain successful as a pure-play cloud vendor, even given the disadvantage of traditional vendors. They have deep pockets to acquire and then huge customer bases to sell into, as well as very broad distribution channels. So they already have SI partners, tech partners, they have their own sales team, they have their own industry sales teams. So they can grow these companies or this revenue stream extremely quickly and efficiently, but Workday, you see, is continuing to pull ahead, and we saw that this year, and I expect to see it in 2015 as well. Roll-ups will always be an issue for cloud, but we do think Workday, Salesforce will continue to be successful in the face of traditional vendors also competing here. So next we'll talk about the platform as a service market. Cloud vendors are adding capabilities, investing in trends like open source, communities, app stores, and also evolving their platform as a service business models to attract a broader set of customers. So here's the overview of the market in 1Q15. And here you really see that there are 4 leading vendors. A lot of smaller vendors, almost everyone is getting into this space. By everyone, I mean public cloud vendors. But there are 4 breakouts. So there's IBM and Microsoft. They both have historically done very well with the developer communities. They've had strong developer bases. Microsoft is looking more towards the broader base of developers. You see them paired a lot of times with Google and AWS. So they want you to build net new businesses on that Azure platform. What's really interesting about them is that they now allow you to build an app on Azure and then run it on-premise, on a private cloud, or a public cloud. So I think that that'll really speak to the enterprises. IBM, in March, they've launched an IoT business unit. So this will tie Watson and their IoT very closely to their Bluemix developer platform. So that's a good use case for IBM, given its Watson and analytics capabilities. So we think they do have, they'll attract some businesses, but I think there'll be a more specialized use case with their platform. Salesforce, a leading platform, they make it extremely easy to use. And most of their applications are tied directly to a Salesforce application, which is great in some senses because it gives developers a broad customer base to sell into. However, Salesforce, where they're struggling is to find developers to build those net new businesses on, so they won't have the Airbnbs and Netflixes of the world. Lastly, you have Google here. So Google was early to market in this space. But it really is, it seems to be playing catch up to some of its competitors like Amazon and Microsoft. And AWS you don't see here because they charge for the infrastructure, not so much the platform tools. Now, what's the interesting thing about Google that I alluded to earlier is that they recently publicly supported OpenStack. They've been kind of behind the scenes supporting OpenStack for a number of years. They launched Kubernetes, which is an open source community around Docker. So they are really heavily investing in the open source community, contributing to it, supporting it. Yesterday they launched the Cloud Native Computing Foundation, which again, it revolves around container orchestration and management. And they're doing this, I think this is going to fuel their long-term hybrid cloud strategy. They understand that customers want to run applications and run workloads on-premise, on private clouds, on non-Google technology, and they're okay with that. It took them a few years to really get here, in my opinion, but I do think that it positions them more favorably in terms of the AWS-Google competition, because AWS, while they're opening their own code, they are remaining closed. They're not supporting OpenStack. Google now, you can develop on Google. You can run applications wherever you want. So this is a huge key to their strategy, and I think to the whole OpenStack market in general. You've had the big players supporting them, so IBM, Cisco, Microsoft more recently, HP, Dell. But now with such an innovator like Google also supporting OpenStack, I think we're going to see a shift in the developer community to embrace the technology that much more. So there are a couple common stories between all of these platform vendors. So app stores and communities. We've seen a lot of development here this year so far. App stores are important both as a distribution channel, so you can reach global customers, as well as a sales channel. So these companies don't have to invest a lot in a direct sales team, but if they do marketing, and they can go right through the App Store. In the quarter, Salesforce, or actually in April, Salesforce launched Heroku Elements. So this is the first of its kind. It's an app store, but mainly for developers, making it really easy to find different tools to help them build their apps. ServiceNow also in April launched Store, which is their app store. They had a version of an app store before, but it was free for their customers. And lastly, Verizon in November launched the Verizon Cloud Marketplace. And for them, it's starting to fill that gap. So they've had infrastructure for quite a while, but we're really lacking the platform and SaaS capabilities. Communities are big. This is where Amazon and Google are taking the lead, again, due to the nature of their developer-focused histories. They have meetups, hackathons, a lot of self-service resources. And the goal of building these communities is because developers trust developers. You can market and sell to them all you want, but until they hear it from a peer, it's not going to be as meaningful. So these two companies have done extremely well here, and now we're seeing other companies, IBM, Microsoft, and others, start to build these communities as well, or plant the seeds and have developers build up these communities. And lastly, the other big trend we're seeing currently is training. A lot of these platform companies, it's new technology, so they're launching training courses globally to get developers on board, both from a college level, so there's AWS Educate. Google is launching training courses. IBM and Microsoft have invested a lot in training partners. It's almost like a grassroots sort of to get your platform in front of developers, and if they know it and like it and use it, they're much more likely to bring those platforms into the enterprises.
Just wanted to hit on one other thing in terms of the App Store as it relates back to those more difficult business transitions that we see as an important part of how public cloud changes going forward. Because for the App Stores, I think there's been this perception that if you put up an App Store, the majority of your business can be generated through folks with a credit card that come direct, that don't need help, that don't need questions answered before they can move forward. And I think that's being proven out over time as not 100% the case, that the real role for the App Store and the reason that it's important for these vendors that have built them to have done so is that it's a way of engaging that is as low a friction way as the customer would like. So if they want to have a portal to go and do a free trial, to have some experience with the product, be able to really try it out before they, as part of that evaluation, that can happen. If they would like to talk to somebody, if they would like to figure out which solution might be right for them, having that personal touch still is important in terms of, for most customers, they're going to need that, they're going to want that. That will be part of the criteria for the types of solutions that they're choosing. But for others in their organization or different organizations in general, the requirement to have to go through a relationship salesperson, have a phone conversation rather than a text conversation, and to have that as a lot of times remains a barrier for the way that us as consumers, businesses as consumers of IT are evolving to in terms of how they want to evaluate and move forward with different solutions. And so I think that's the real reason an App Store is important, and allowing a way for free trials and trial accounts as part of that is an important engagement dynamic that we've seen, heard from customers and seen a lot of vendors striving to provide, even if they are still selling a lot of the traditional solutions directly with face-to-face or over-the-phone contact.
That also ties back to satisfaction. So customers can go in the App Store and look at the highly rated tools. So say there's 25 CRM tools, they can look at the ratings and what the customers have said, and that also plays into the peer review and the satisfaction aspect.
In the whole community.
This slide shows the evolving business models around platform as a service. A lot of companies are transitioning or evolving the models to include everything, giving customers the choice. So here I wanted to help or to talk about how they actually make money. So there's a couple of different models, and again, this is going to be general. There's a lot of different variations at this point. So there's the infrastructure as a service model, which is the first green bubble. in this model, this is the AWS or Google Compute Engine model. You pay for the compute and storage, but you don't pay for the developer tools. In this case, it attracts developers who want to play around in building different types of tools, but just pay for what they use. At scale, this can become extremely expensive extremely quickly, but for the actual building, it's very cheap. Now, the more traditional platform as a service model, you pay a set fee, so usually a monthly fee, for the developer tools, but the compute and storage is quote-unquote free. This is like the Salesforce.com model, Google App Engine, Pivotal. So in this sense, you can develop and deploy an application, but you're not paying for the underlying compute and storage. So if one day your usage spikes, you're not going to get a bill for, $800,000 that you're not expecting. Now, the additional revenue stream for both of these, again, goes back to the ecosystem. So there's an initial fee usually, there's a usage fee, so they would pay the monthly usage most likely. And then there's also a percentage of their revenue that goes to the vendors. Typically, we've seen this to be around 15 or 20%. Now, all the models are blending at this point, and you see Microsoft, IBM, SAP, Google are offering a mix of all three. We think eventually all three will be offered by all vendors because customers are going to want to use the platforms for different use cases that will require different payment options. Now, the last topic we'll hit on is the infrastructure as a service market. Here we see AWS continuing to lead the market by a long shot. However, the contenders are catching up. There's Google, IBM, Microsoft, Alibaba, mostly in China. So the vendors I've circled here are the ones that people are really looking at the most when they look at public cloud. They have higher adoption and higher revenue. The rest of the vendors, and a lot of them are made up of telcos, they do have a presence in the space, but the growth rates remain relatively stagnant. Now, I do think that rack space is probably with Amazon, Google, Azure, probably the fourth public cloud vendor that companies are looking to. But again, with their rebranding and with them potentially putting themselves up for sale, I think they've had some struggles there, but I do think that they'll continue to do pretty well in this space, especially now that they offer managed services around other very popular horizontal applications. We see this market shaking out into a couple different groups of vendors. Again, there's the AWS, Google, Microsoft. These are the major broad-based public cloud vendors. There is potential, again, for Rackspace, IBM. I think CenturyLink probably is I'm putting my bets on for the telco. They'll probably play in this space as well, but Amazon, Google, Microsoft will dominate. Then there'll be regional vendors. So we've seen this already coming out in some of our adoption studies. So there's Alibaba in China, BT and Orange in Europe. We think that these regional players do have a play here. Then there's specialized vendors. For example, IBM could be your cloud for analytics use cases, SAP for business process use cases. So we think that traditional vendors have the opportunity to customize their infrastructure, their messaging, their capabilities around certain use cases, be more of a higher level type of cloud infrastructure. And then you have the potential for the highly customized secure clouds. And I think the networking vendors like Verizon, potentially Accenture, I think that they can play here. So this will be for very large multinational companies that need an extremely secure, extremely customized cloud, which they'll need that level of infrastructure for. Then going a little bit deeper into the regional players and the regional point of view, this quarter we've seen India as a place of investment. I think part of that is driven by the slowdown in China and Japan. India is a huge economy that a lot of these vendors are starting to invest in a little bit more. So Microsoft, they have plans to open a data center here. They've formed partnerships with some of the Indian vendors to start to train up the SMBs on Azure and O365. AWS, they've had quite a number of startups in the region, and now they also plan to open a data center by in 2016 in the country. They're also partnering with telcos like Bharti Airtel to get that regional presence and to be able to offer better service. And lastly, IBM. They've had a data center in Mumbai. They now plan on opening an additional data center to address more public sector concerns, which leads me to believe they have a significant government and financial presence in the space. And with that, we'll ask for any questions.
All right, so just a reminder, if you have any questions, please send them to the Q&A function, and we'll begin. How important is OpenStack in the public cloud space?
Sure. So OpenStack has been, really until recently, it's been more prevalent in the private cloud space. With Google supporting OpenStack, I think it's become a lot more relevant in the public cloud space as a way for the pure public cloud vendors to have a path into private cloud. With Kubernetes as well, another open source tool or open source program, customers can build once and then deploy on public cloud, or with the Mirandi partnership with Kubernetes, they can deploy on a private cloud. So I think that, again, OpenStack right now is at a turning point. We've talked to customers and vendors about it for the last few years, and customers have understood the importance. They do want their vendors to support it, but now I think we're finally starting to see more traction and more adoption. And for public cloud vendors, that will be huge because it'll allow them to have a hybrid cloud strategy without investing in building out private clouds and data centers themselves.
To what degree is the market asking for managed PaaS, and what PaaS services are being offered as a managed service?
Sure. So I think if you look at cloud overall, one of the overriding themes that we see so far in 2015, I think it'll continue, is the growing demand for managed services, brokerage, intermediation, operational assistance particularly for on-prem private clouds. And so I do think that's a growing area across the board for cloud. In terms of for the public cloud platform as a service, we haven't seen as much in terms of customer demand for custom development help or guidance, that type of thing through the public side. For some of the private platforms, if we look at IBM Bluemix on-prem, those types of engagements do have much more development assistance from the systems integrators, the traditional application development and management providers on the SI side. I don't think it's huge at this point, but we are seeing more interest among customers for apps that either hit pretty close to the core of their operations, or if you're looking at those re-platform engagements, there's a lot of opportunity around that in terms of managing, helping with that migration, and then at least temporarily for the operational support to get them deployed. So I think right now we are seeing more focus for managed services. A lot of it today is on the operational side, supporting SaaS integration infrastructure, and so we don't see as much on the public cloud platform side of the house yet.
All right, next question. Do you have any special remarks for Germany?
Sure. Germany seems to be the second country of investment in Europe. So UK, then Germany, then France, then some of the Nordic regions seems to be how the vendors are going about their European expansion. We have seen a lot of data center activity in Germany, especially with the AWS and Salesforce announcements. So I think that will continue, as well as local partnerships in the region. It's also spurring growth outside of Germany because European customers are probably more willing to use a German data center than one in the US. However, we still are seeing pushback from some customers that are public sector or financial services, whereas even if a US company has a German data center, if push comes to shove, the US can get into that data. So I think there's an opportunity for more European or German-based data center companies to offer cloud, because we have heard that concern, and I think it is real for a lot of these more regulated companies.
All right. Next question. Do you have any estimates of the overall public cloud market size or market size of infrastructure as a service, SaaS, and PaaS individually?
Sure. We model the cloud market into 18 unique buckets. We have market estimates out to 2020 for all of these segments, and also by region. I don't know them offhand, but we can follow up to see what we can give you.
What other countries do you see cloud vendors focusing on in 2015 and 2016?
Aside from India and some of the Nordic regions, I think Latin America, they've always presented a big opportunity, but I do see more investment in Brazil. AWS recently stated they were going to focus on the country a little bit more. They have a pretty broad customer base there, so they're going to spend more time with those partners down there to learn how to further expand in the region. IBM opened a data center in Mexico a year or two ago. So I do think that there's an opportunity there, but it will most likely be through local partnerships.
And also in the context of some of the more recent earnings, you can see that for traditional vendors, Latin America, there's a lot going on in terms of the macroeconomic environment that's negatively impacting performance. So, it is a case where the overall spending environment is difficult, but it is an opportunity to kind of go back to some of the original value proposition, particularly around public cloud, of being able to reduce cost, deliver services at a lower expense level, defer capital expenditures. All of that type of value prop and messaging could very well have more resonance in Latin America, given the situation where we see some of the more mature IT regions shifting to, how can we hybridize, how can we knit different solutions together to address business problems. And so I think in that type of environment, those are the types of go-to-market messages that we think will have more resonance in emerging areas, particularly Latin America, than in the mature regions.
All right, and I've got one last question here. What impact does IBM's partnership with Box have on the public cloud market?
So I think for where we see a lot of vendors going, you see everyone talking about solutioning and end-to-end and the ability to not just deliver technology, but outcomes for businesses, which is, I think overall where we see a lot of customers is they see the technology, they get some of the benefit in terms of the flexibility and the cost model, but there are gaps in terms of their organization, how they're going to use it, the politics in terms of how decisions are made and the course for different business outcomes. So all of that is really playing into or preventing this full-scale acceleration through the cloud technology that's available. And so when we look at, I think the Box partnership for us, you could say, well, it's just about file sharing or collaboration, but given the focus by IBM on not just the way that users are provisioned certain data or the way that they can collaborate, but also tying in the partnership with Apple and the device, starts to get to a model where I think more cloud vendors are going to go is it's not just about the technology that's available, it's thinking about down to the end user, the type of outcomes and use cases they can have in terms of being able to be in an application, share data, be able to collaborate, make decisions, and actually put the technology to use, speaks to, I think the partnership will have some impact in terms of IBM's business and Box's business. But I think more broadly, it's an example of where we think more cloud vendors will be going in terms of how to, through partnerships, really get to something that resonates more distinctly with customers in terms of what they can do with it.
All right, so thank you, Allan and Jill, and thank you, everyone, for your questions. You can follow the analysts as well as TBR on Twitter, on their handles listed here. Please feel free to check out our pages on SlideShare and YouTube as well. Additionally, just a reminder, we'll be following up with all of you via email tomorrow with the link to the recording of this presentation as well as the slides. So additionally, before you sign off, I'd ask you to take a very brief survey on the presentation today. We're always looking to improve both the information we provide as well as how we get it to you. So we'll leave the chat function on for another minute or so. People will send in last-minute questions, and otherwise, have a great afternoon. Thanks.